Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey, thanks for tuning into the podcast. Today we're going to be talking about Procter & Gamble's fourth quarter of 2017 and what we can expect going forward in 2018. If we look at the fourth quarter specifically, we see some margin compression, we see a lack of pricing increases, and that's really what analysts pointed to as reasons to be more negative on the quarter. You had some commodity price increases that were leading to cost increases. So think about your oil prices. That means higher transportation costs, higher packaging costs. So you had that piece of it. And then you also you weren't able to pass through a ton of these costs to the consumers. In fact, pricing actually wasn't as robust as analysts had expected. Finally, if you look at the geographic mix, you're shifting more to an international mix. And historically, Procter & Gamble has had a more difficult time growing margin when you shift to an international business. So if you think about if you're in one geography, you spend money on distribution, on marketing, and you spend it in that country, you spend it in the US, but if you spend it in smaller countries, all of a sudden you're losing less scale on those fixed cost of goods sold. So for that reason, you have lower margins internationally. And so actually, if you look at the core gross margin in, it's actually the fiscal second quarter, which just happened, but it's the December quarter, core gross margin was down 80 basis points, which was actually an acceleration from 40 basis points down the previous quarter. Some of that was from foreign exchange, but that's really not becoming as much of an issue as it was. If you look at the guidance for fiscal 18, which will end in June of 2018, pretty much all reiterated down the line. They didn't get as much of a boost from taxes as one might have expected, but the guidance was ultimately moved to $4.12 to $4.23. Slight improvement from the $4.12 to $4.19 prior estimate. And that was all taxes. You're not really seeing a whole bunch of core operating changes from Procter & Gamble. So if you look at it on the surface, you're saying, man, these guys are having margin increases. They're not able to pass through pricing. They're not able to pass through that on pricing. But then if you look a little bit into the deeper story, I think this is when Procter & Gamble's thesis really comes out. If you are long Procter & Gamble, by the way, we are long Procter & Gamble in both personal accounts and for clients. But if you look at volume growth, you're seeing an acceleration in pretty much every category. For example, on organic volume for beauty, you're up 2% from 0%. Grooming, you're up positive 1%. You were down 1% last quarter. Healthcare, you're at 4% from 1%. Fabric and home care, you're up 3%, 2%. Saw a little bit decline in baby care. You're seeing some weakness in China, and they're still trying to work through that. They have a lot of regulatory pressure and increased regulations coming on in China, which has really disrupted the market. I expect that to be resolved over the next few quarters and coming years. That's just a process. And that you need the right distribution, you need the right manufacturing, and when those regulations increase, there's just an adjustment period. And I think Procter & Gamble will work through that. Overall, you saw the total volume improve, though, nicely, sequentially. And so what you ultimately see is Procter & Gamble losing a little bit on pricing and gaining some on volume, but they don't want to play the pricing game. That's not Procter & Gamble's strategy. They want to play the innovation game. You say, well, innovation in consumer products that you buy all the time. Well, but then you think about the Tide Pods and some of these other innovative packaging ways. And that's an innovation. It sounds boring, but people will buy up and the people will pay up for that. And so that's what they're trying to do. They don't want to play the pricing game ultimately, but that's just a fact of the mix shift right now that they're seeing. My view is that volume leads pricing. So you have to get the volume increases before you can hope to get the pricing increases. That's just sort of supply and demand. You see that in a lot of commodity producers as well. So I think the same thing is going to be happening at the staples companies and at Procter & Gamble specifically. Interestingly, when you think about inflation and higher interest rates, a lot of people would say you want to stay out of the staples when interest rates are rising because the dividend looks less attractive. However, if you go back through time and if you just look at the S&P 500 staples sector performance back through 1988, what you'll see is actually the correlation with inflation is actually very high and positive with the consumer price inflation and staples in general. So I think that the thinking that staples should be negatively correlated with inflation is actually faulty, and I encourage you to do your own work on that. Ultimately, I think that Procter & Gamble is going to continue to have solid volume growth. I think that the margin situation will resolve itself. I think people are reading too much into one quarter here, and I expect Procter & Gamble, especially with Trian Partners and Nelson Peltz involved, I expect them to continue to move forward from this point in time, and that's why we're long the stock for both personal accounts and for clients. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.